Ever wondered how corporations navigate the intricate labyrinth of taxation, or how companies assess their short-term financial strength? Or what exactly is a bank reconciliation statement, and what on earth are fictitious assets? Today, we shall embark on a journey to unravel these intriguing concepts. First off, we have deferred tax assets. Picture this: a corporation has prepaid taxes or has overpaid taxes in the current year. This overpayment is not lost. Instead, it is recorded as a deferred tax asset, a beneficial item that a company can use to offset its future tax bill. It's like having a gift card for future tax payments. The value of deferred tax assets is created when the amount of taxes paid or payable in the current period exceeds the amount of tax expense in the financial statements. Now, let's turn our attention to the acid test ratio. Also known as the quick ratio, this is a tool that companies use to assess their short-term liquidity. It's essentially a stress test for a company's immediate financial health. The equation is simple. You take the sum of cash, marketable securities, and accounts receivable, then divide it by current liabilities. A high ratio signals that a company is well equipped to meet its short-term obligations, while a low ratio could be a red flag. Moving on to the bank reconciliation statement. Sounds like a mouthful, right? But it's just a statement that explains the differences between the bank balance shown in a company's bank statement, as provided by the bank, and the corresponding amount shown in the company's own accounting records at a specific point in time. Think of it as a cross-verification process to ensure that the company's financial records align with the bank's records. Lastly, we delve into the world of fictitious assets. Despite the name, these are not imaginary or false assets. Fictitious assets are expenses and losses which, for some reason, could not be written off during the accounting period of their occurrence. These are recorded as assets in the balance sheet, not because they possess any realizable value, but because money has been spent on them. Examples include preliminary expenses, discount allowed on issue of shares, and loss incurred on issue of debentures. In a nutshell, deferred tax assets are prepayments for future tax bills. The acid test ratio is a measure of short-term financial health. A bank reconciliation statement aligns a company's records with the bank's, and fictitious assets are essentially expenses that couldn't be written off in their accounting period. Understanding these concepts can help one navigate the complex world of finance with greater ease. Stay curious and keep learning.